There we go. Hello. Hi. Welcome to A Moment in Time with Taylor. We are live right now on Periscope and YouTube. Thank you for coming in. First comment to the broadcast goes to William over on Periscope. I see Ben. I see Rhodey. I see a picture I don't recognize. Resonance. Hey, what's up? Why am I singing? Thanks for inviting your followers. Thank you guys for being here. I appreciate you. I appreciate your time. I won't waste it. I'm going to dive right in because this is actually going to be a pretty short book review for such a long book. Unless you guys have questions and things, I will keep up with the comments. But it's a girthy one for sure. It's about 500 pages. Maybe 530 pages, I think it was. Yeah, 531 pages. This is the book we're reviewing today, The Intelligent Investor by Benjamin Graham, the definitive book on value investing. So this book was, this is basically like Warren Buffett's Bible from when he was first learning about investing. If you're not familiar with Warren Buffett, he is one of the wealthiest men in the world. He has made quite a living off of investing from Berkshire Hathaway, which is the company he is the chairman of. And his partner, his right-hand man, Charlie Munger, is another person that I've studied. I've actually studied Charlie Munger more thoroughly than I've studied Warren Buffett, but I do have his book over there, The Snowball. I think it's like there. And I'll be reading that one and doing a review on that one upcoming as well. So please do subscribe and follow if you're interested in different kinds of books about finance, investing. I read a lot of different kinds of books. I read lately, I'm actually a new step parent, so I read books about parenting. I read books about psychology. I'm a psychology major in college. And I read basically just nonfiction, like anything personal development, business, anything you could probably think of that's not a fiction book, I pretty much have read or will read and do a review on. So I also send out email book reviews, which are free, and I only send them 3 times a year. So I don't send you like daily or weekly or even monthly emails for the book reviews. It's just once every 4 months, I'll summarize and review all the books that I've read over the 4-month period and email it to you. So it's pretty cool, and that I include the links too, so you can get the book yourself if you're interested in that. It's not, I haven't been reading as much as I used to read because now I'm in college and I have to read textbooks and write papers and do a lot of different stuff, but I am still shooting to read 24 books this year, which is about 2 a month. So I don't know what number I'm on so far, but I did finish this one a while ago, and I haven't done the review on it just yet. Hey, Reggie, I'm doing good. How are you? Let me catch up on comments real quick. Reggie, you were actually second. Hi, Raiders. Hey, King. Oh, Double King. King Native and King Midnight. Game of Thrones, that's a question mark. So that's fiction. So I didn't even know Game of Thrones had a book, honestly. I'm sure it does. I don't read fiction. So that's the one kind of category I don't really read. I do review some TV shows, which are reality TV shows, which is totally different thing that I do. I do a lot on here, so I know that you guys won't always catch all the live broadcasts that you want to catch, and some of you really just want to know about the books I'm reading and what I thought and like what the book was about, because I read a lot of books, so you don't have to. And the email is really good for that because I'm not here live in the chat, and it's very succinct, and it's all just typed up into like a little paragraph or a few paragraphs. And when you go to sign up for it, it's on my website, nextjuice.com. Like I said, totally free. And when you sign up for it, you can actually see a link. It'll say like, see all the previous campaigns or something like that. Click that link. You'll see exactly all the emails that I've sent out to that list since I created it. And you'll see exactly what you're getting into before you even sign up. Do I read Harry Potter? I did read it when I was a kid. I liked fiction when I was younger. My uptime is 4 minutes and 14 seconds. A real door stopper. Yes, Resonance. Okay, let's get into it. You think you're the only king? Let's put that one up on the screen. Oh, that's not the right one. Intelligent Investor. Yes, Josh, that is it. It's The Intelligent Investor. It's considered a kind of like the Bible and the original thoughts of value investing. So what is value investing? Let's get into that. I do want to hear a good joke, Howard. Yeah. Let me just get Midnight off my screen. Jokes. Only bad jokes, Lydia. Dad jokes are preferred. That's true. When did they write a book about you? Is this the book about you, Jose? You're an intelligent investor. I'd love to hear what you like to invest in. So this book is about stock investing, and value investing could be applied to different types of investments. But in terms of the stock market and buying securities, buying shares and pieces of different companies, the main moral of the story of this book and all value investing is that you want to buy something that's priced lower than its value. So you want to buy stocks on sale. That might seem kind of obvious, buy low, sell high. It seems like kind of the intuitive, obvious thing to say, in my opinion, but it's really not. There's a lot of different ways that people invest, which is like, day trading, Forex, growth stocks, and there's other things that you can invest in outside of stocks, but that's really what our focus is here today. You can see I actually have a playlist on my YouTube channel called Investing, and you can actually see all my videos that I've done on YouTube about that topic in particular, because I've read a few books about it. Pretty much all value investing is what I've studied. I've looked into some of the other types of investing. I use that word very loosely because actually what he says in this book is that there's a difference between investing and speculating. So speculating is gambling. It's basically guessing what's going to happen in the future. So you're speculating if you're buying shares of a company that hasn't been around very long. If it's less than 10 years old of a company, you don't have that long of a track record. You haven't really been able to see this company go through different economic cycles. You don't really know what's going to happen. Maybe right now they're the only company that does what it does, but competition is a very real thing. And if they're very successful, a lot of copycats are going to come up from it. So you want a long-standing company that you can see its competitive advantages. You can see how does it handle down markets? How does it handle changing technologies, emerging technologies? Does it adapt, grow, and evolve? Or does it really, really struggle if the slightest wind blows? So if you're just investing based on a hunch or a guess or based on everyone else's hyped up about it, you're speculating, you're gambling. You might win, just like when you go to the roulette table and you put your money on black or you put your money on red, you might win. It's possible, right? But you also might lose, and you're actually more likely to lose. And it's the same thing with speculating in the investment world. So that's an important distinction he makes here between investing and speculating. And as investing's become more popular, this book was originally written, I want to say in like 1958 or something, and I think this is the 1973 edition, and it has commentary from Jason Zweig, which I believe is from 2003. So it's still a pretty outdated kind of, I don't know that it's outdated, but it's an older book. Yeah, it's outdated in terms of it's not the most up-to-date information. He's no longer here with us to tell us what he thinks about it in terms of the author Benjamin Graham. But the concept, the premise on which this is built, the foundation of value investing still stands today. And this book is still referenced by some of the major value investors that are active today. So value investing is the only type of investing I've really talked about on my channel in somewhat of depth, actually somewhat in deep depth. And what I found interesting was the differences that I found between Phil Town, Warren Buffett, and Charlie Munger, the three guys that I've kind of studied the most in terms of investing, and how they contradict Benjamin Graham. That was the most interesting thing to me, is kind of looking at the other side of the argument. And what I found to be probably the most, think what order I should say this in. What I think is one of the most interesting things is that he highly encourages investment in total market index funds. Now, Benjamin Graham himself, doesn't really do that directly because they didn't really exist when he wrote this book. But the commentary from Jason Zweig, someone who is kind of like an apprentice of his, is that if he were alive today, that would be his number one recommendation for defensive investors. So you have speculators, you have investors. Okay, so that's a primary distinction they make early on in the book. As the book progresses, you learn about two different styles of investing. So we take away everything that's speculation, even if some people call it investing, okay, like Forex investing, it's speculating, you're guessing, you're gambling, you're trying to read charts and guess what's going to happen in the future. Now, to some degree, all investment has, we are trying to make some prediction about the future, but speculating is overly optimistic, right? That everything's going to go great. It's always going to be blue skies. An investor is really trying to figure out what can go wrong. What are all the different things that can go wrong? And how is this company built to react and respond to the bad days and the rainy days? And are they equipped and ready for this in terms of, their debt to cash flow, their assets in general? How big of a company is this? The concept of like too big to fail. The larger a company is, the more it can kind of handle the vicissitudes of life, as Charlie Munger would call it. And that's really of the utmost importance. And still, even if you're thinking, okay, this company is great, this company is going to last long into the future, I've done my research, then it's a matter of, okay, what price is reasonable for this company based on the numbers? Rather than saying, oh, well, based on where it was 5 years ago or 10 years ago, and based on its competitive, its competitors' pricing for their stock. Instead, you're really doing a valuation of the company. So one of the next books I'll be reading is actually a textbook about valuation. And that'll be a heavy read and probably take me a while to get through, but I'm excited to read it and share it with you guys, because we did do some valuation strategies from Phil Town's book, Rule Number 1, Investing, and his daughter, who wrote a kind of another book from his daughter's perspective called Invested by Danielle Town. So we learned a lot about valuation strategies there. He talks about them in here a little bit. To be honest with you, this book was very dense for me. A lot of the language and the information here, the language of finance is still something I'm learning, even over the past couple of years of studying it. I don't study it full time. Like I said, I study a lot of different things. I'm curious. I'm a learner. I like to learn and read. So I'm still very much a novice and amateur, and I'm not a financial advisor or planner. I'm just a girl interested in what to do with my extra money. So I've been learning about investing. And I'll read your comments in a moment. Hey there, Mark. Good to see you. Hi, Lou. Thanks for inviting your followers. Hi, Katie. Hi, guys. Hey, Marsha. Hey, favorite Frankie, who just popped in here. Residents came back. Hey, guys. Good to see you. Thanks for retweeting. Thank you. Okay, so we talked about the difference between intelligence, investing, and speculation. So we remove all speculation, and now we're just talking about investing. Now, within the realm of investing, which is, very calculated risk in buying something on sale, would be, and if you want to see about valuation, just go check out some of my previous videos. They're in my investing playlist on my YouTube channel. Now, if we want to get into, are we live on YouTube right now? I hope so. Anyway, so the two categories within investing is defensive investing and enterprising investing. So you have a defensive investor or you have an enterprising investor. And these are two very different strategies within that same umbrella of investing. And the vast majority of people are going to fall into the defensive category, or should fall into the defensive category. Now, I get it. If you're like me, you want to be the enterprising one. Even just the word enterprising versus the word defensive is like, I don't want to be defensive. I want to be enterprising. I want to be creating value and wealth and growing and outperforming the averages. When it comes to investing, that is possible, but it takes a lot of time, a lot of research, and a lot of, time in general, just that energy and focus to really make this almost a full-time job. To be studying the markets and the stocks every single day and all the different foreign markets, and really trying to make your results better than the average. It's possible, and he talks about ways that you can do that in this book. It's not the strategy that I choose to adopt, and I didn't take notes on that. Really, defensive investing it's a passive strategy, and a lot of us, I think, are looking for passive income that comes not from having to be enterprising and having to put a lot of work in, because most of us already have our work, right? Maybe you work a job, a career, you're an employee. Maybe you're like me, you're an entrepreneur, you have your own business, maybe multiple businesses, side hustles, and you're already busy. So the last thing you really want to do with your extra money is now create another job for yourself where you have to be a full-time analyst in order to get better returns than average. So he strongly encourages defensive investing in this book. And he says, the vast majority of people should be defensive investors. And I really like that that to me rings a lot more true. And Warren Buffett has said too, if you don't know what you're doing, just invest in a mutual fund, basically an ETF, like a total market index fund or some type of fund to protect you from risk and help you to diversify. Now, if you're an enterprising investor, and I think this is where it kind of like got broken down between Benjamin Graham and some of the other guys I've been studying, is that Warren Buffett, Charlie Munger, Phil Town, these people that I've been studying for investing, these are enterprising investors. They're not defensive investors. These are people that make their money off of investing. It's their life's blood, right? This is what they do. And maybe it is for you too. Maybe you have to read this book yourself to really learn about what he says about being enterprising. But for the rest of us, we have defensive investing. And the number one way to defensively invest is to invest into a total market index fund. So a total market index fund, the example I'll use is the one that I invest in, which is VTI, the Vanguard Total Market Index Fund. It is I believe, 0.03% management fee. I've talked a lot about this, so you guys got to watch out for fees. You got to watch out for everything. But in terms of just trying to be kind of basic and give you the overview of the book here, is that I'll talk about VTI. They have over 3,000 companies. So they're doing their best to represent the entire market so that if the market goes up, your portfolio goes up. If the market goes down, your portfolio goes down. So you're basically just trying to be average. You're not trying to outperform, because something like 10 to 20% of people that independently invest and pick the companies individually that they want to invest in do outperform the market. But that leaves 80 to 90% of people that try to do that, which fail to outperform the market, which means that if you had just invested in a total market index fund, you're outperforming 80 to 90% of people who try to independently and individually pick their stocks. Because this is big money, big banks, hedge funds that are moving money around and making the real moves and almost making the market. You really think you're going to outperform them? You can. It's possible, okay? And I know even if you're sitting here on a Saturday learning about investing and sitting here and watching this book review stream, you're already probably in a 10-20% weird minority just by being an intelligent person that wants to learn about this kind of stuff. Still, the odds aren't great. I know that you're different and you're unique. I feel the same way when I read this stuff. I'm like, oh, I can do that. And you can, and I can, but I choose not to. I choose to focus my energy on other things. I want to become a therapist. I'm enjoying live streaming. So I'm going to keep focusing on those things. And I'm going to just defensively and passively invest my money into a total market index fund primarily. Then he says, you can have maybe 10 to 20% of I think he says up to 10%, no more than 10% of your portfolio in speculation. Pick a company, right? I have Twitter as well. I picked Twitter. I got really lucky. I doubled my money. That was random. It was just, I like Twitter, so I bought it, and I got lucky with the time that I bought it. I hadn't studied it. I didn't know any of this stuff. I got lucky. But I do keep that as, actually, I think because it doubled, it actually went to like almost 20% of my portfolio. So you just try to keep it balanced. And for those of you who feel like you need to, put something in and do something with your portfolio, analyze it every quarter, every 6 months, or every year, at least every year, and just make sure that your allocation is the way that you want it. So let's say you're going fully into stocks. So you would have 90% in a total market index fund or in different various funds, and then 10% in speculation. And then you want to make sure, so if one kind of goes down, now it's less than 10%, you can increase that if you want. You can get more speculative stocks. But if it's done really well, you got lucky with some kind of growth stock or something, you might need to kind of sell some of that off or really just focus on investing more into the index fund so that you're balanced. Now, he does talk in here a lot about bonds. Now, sorry, my nose is like, has something in it and I don't want to pick it while I'm live. I think there's like a little hair in there. I need tissues. Anyway, he talks about bonds in here a lot. Now, I did a broadcast about bonds when I first read that section and studied that. I did a full broadcast about bonds, so you can check that out. It's in my replays. I'm not a big fan of it. I did a lot of research. I hadn't studied it before this. I did a lot of research into it. I was not satisfied with the type of returns I'm going to get from any type of bonds. And I get a pretty good return on my savings account from my bank. It's it doesn't even keep up with inflation, of course, but neither do bonds. Apparently, they don't seem to. So I personally favor stocks. I'm also 29 years old. So if you're almost about to retire and you're worried about, you just want to make sure that your money is safe and just get like a little bit of a return on it, and you realize that you're still going to lose some money to inflation, but you don't want to take the risks of the market's ups and downs, because it will have downs. Okay, it's not just going to go up forever. And right now it's been going up for a while, and it's due to basically have a down. So if you're like, oh, well, I just need this, I need to make sure that I have money in the next couple of years, then yeah, I get it. Maybe you would want to have more bonds. So I think what he says is the most you would ever want to have in either stocks or bonds would be 75%. So let's look at this. So you would have, and you want no less than 25% in the other. Now, I don't agree with that. I personally don't put 25% of my money into bonds. That's just me. Again, I'm not a financial advisor or anything. I'm just telling you what I think. I read these books and I tell you what I think. So I don't do that. I read a really great book I liked called Financial Freedom by Grant Sabatier. And he talks about how, depending on your age, when you're 29, you're probably fine going all stocks, because all my money isn't in stocks. My investment portfolio is in stocks. I still have my savings, my rainy day funds. I still am generating cash flow. So it doesn't really matter what happens to it as it goes up and down, because that's future money. I actually invest all my money, besides the Twitter, into a Roth IRA that I can't even touch until I'm 55 plus. So I'm not really worried about like risk right now, because in that period of time, in the next 30 years, it's going to be up in general, right? On average, the market goes up 7% per year, but it's an average, right? So sometimes it's up a lot and then sometimes it's down a lot. So depending on, you don't want to be like, I'm going to need this money at a certain time. And if you are in that position, then bonds might be an option for you. Okay, let me scroll on through and see what comments, because we talked about, and what he calls for the value investing, same thing that Charlie Munger calls it, is a margin of safety. So this means that you're buying it for pennies on the dollar. You're trying to get something as cheap as possible. So you run your valuation, and then you will not pay a price more than what you find to be a fair price. And really, you want, according to Charlie Munger, you want half of that. You want to pay half of that, and Phil Town as well. You're trying to basically get $1 for 50 cents. So pretty interesting stuff. I really enjoyed this book. Here it is one more time, The Intelligent Investor by Benjamin Graham. Let me catch up on comments, and then we will wrap this up. And I'm going to do another book review right after this about a book I just finished called The Power of Habit by Charles Duhigg, which is very interesting as well. This is more of a psychology book. Only 5 seconds of fame. Sorry, you want more? Here you go. It had 4.6 out of 5 stars on Amazon. This book, yes, yeah, it's a lot. It's interesting to me that I can kind of sum it up into speculation versus investing, enterprising versus defensive, and then the margin of safety, which I was already familiar with from previous studies. So it was such a long book, and it took me so long to read, and I was just really, I think, caught up in the nitty-gritty, just trying to learn the language and try to understand what this guy was saying. But it was challenging. It was definitely challenging for me. So again, that's why I read these books, so you guys don't have to. I kind of give you like the gold nuggets I find in them, And I think I'm a pretty good information assimilator. I read and I take in information, and then I communicate it, I think, in a pretty relatable way. I think most lay people can understand what I'm saying. Hopefully, if you don't, please just ask questions, put it in the chat, privately message me, whatever you want to do, because I'm trying to be as clear as possible. And I know sometimes I go off on tangents and I get distracted and I ramble. So just let me know if you need clarification on anything. Is buying some new shoes on a killer sale value investing? It could be, yeah, for sure. Yeah, that would be more like value buying, because you're not going to get your money back on a pair of shoes. When you're investing, you're trying to get more money from the money you put in. You buying something on sale is a good, if the original price was reasonable, then that would be valuable, right? Please don't spam the chat. Spam. If you guys see anyone spamming, you can just report their comment for spam, and then their account will hopefully get shut down. Lanemaker. Yeah, it's from, I think, 1973. The commentary is from 2003. I'm thinking of investing a sub to Next Juice and Top Shelf Pineapple on Twitch. Yeah, do it! Do it, do it, do it. Again, not an investment because you're not going to get money back for that. But hopefully we'll get lots of information, which is priceless. What Acorn, is that a good app? I'm not familiar with that. Autocorrect kicking your butt today. How do you get from here to, I don't even know how to say that. Oh, Carnegie maybe? The answer is practice. I like it. Jason Zweig is a writer at Money Magazine. Thank you, Tony Tabor. I appreciate that information. Thank you for saying that. I'm lagging, Dutchie. You always say that. Hi, Zmog. Are you Johnny? Hi, Johnny. And all the experts called the pandemic? What? Hi, Chloe. Hi. Hey, Esrod. You're loving the juice? He's loving the juice, loving the juice, loving the juice. Thanks, Lou. I'm glad you love the juice. Put me on that starship. The best offense is a good defense. Tony with the comments of the broadcast. Dude, I should have you on here split screen. Do you like to talk about this stuff, Tony? I'd love to interview you if you'd be down for that. Is eating sugar-free gummy bears being a speculating ingester? Yes. Speculative, yes. I work 42 years now for housing. Nice. Hope you have a great day today. Me too. I hope you have one too, Mark. Recommend financial apps or websites. I use E-Trade. Whatever you want. Just research them. I'm very wary of new things. Like even Robinhood. I do have that app, but I kind of don't know if that was a great idea. Just the fact that it's free. Nothing in life is free. So what are you giving them? Your data, your information, your privacy. So we do that all the time with all companies. I mean, it's really, I feel really no hiding it, but to voluntarily give it up to another company, especially kind of a new company with not a lot of, again, history or background is a questionable decision in my world. I'm a very risk averse and cautious person. So I'm a very conservative investor and I'm very, I'm very defensive. The best offense is a good defense. There is a good fixed index fund. Fixed index fund? I'm not sure exactly what you mean by fixed. How much money did you double? 500? 500 became 1,000? It was, actually, let's see what it is today. Because I haven't sold it yet, so technically I could go right back down and I could lose money on it. It's actually up more than double what I bought it at right now. So I bought it at, I think, $18.36, and it's at $37.14 as of today. Good to keep track of the fees since it can lower your return on investment. Yes, due to the compound return. Well, compounding return would be good, yeah, but the fees can compound as well, for sure, yeah, so, which would work against you. And I did a broadcast about, let me just unclick this here. I did a broadcast about compounding one day, which I think was really interesting when, the question is, just trying to keep my spot here. The question is, would you rather get, what was it? $1,000 a day, every day for the next 30 days, and you can start spending it right away. You can use it immediately. So day one, you get $1,000. Do whatever you want with it. $1,000 every day, so you get $30,000 in a month. Or would you rather get 1 penny today, and I'll double the amount I give you every single day for the next 30 days, but you can't do anything to it until after the 30 days? Which would you prefer? And people think short-sighted here. So they go, well, that's 1 penny, then 2 pennies, then 4 pennies, then 8 pennies, then 16 pennies, and 32 pennies, 64 pennies. And it's just oh my God, this, I'm only going to get a few dollars the whole month. What you don't realize is that on day 30, you're up to $5 million. So over $5 million. So, who's going to pick 30,000 over 5 million? But it's just that ignorance about compounding. Now finding an investment that's going to double every single year or lifetime is not an easy thing to seek out. But just the amount of people that came into that stream, that was my title. You have 2 choices, $1,000 a day for 30 days or a penny today doubled every day for the next 30 days. Which do you choose? I was really surprised at the amount of people that said they want $1,000 a day, because this is, you see it in the title. So it's probably some kind of trick question. If you know me, I'm a thinker, right? I'm trying to challenge your brains. I'm not really gonna like just be like, well, obviously, it's like this. And I even put like hashtag compounding and investing and stuff, and people still came in and said $1,000 a day, which just shows like people aren't willing to just do like the math on a calculator to figure out how much that would be, to be like, okay, obviously, 5 million. So anyway. Also, some people can't delay gratification. They don't want to wait 30 days for money that they didn't do anything to deserve, and it's completely theoretical and hypothetical. Instead, they want that $1,000 now. That book, From a Different Market, People on Options Now. Well, he did a historical analysis of the entire history of the stock market. So it wasn't like he was just like, today, here's what I think. Like it's an analysis about investing and what strategies would have worked best for that like 100 years or something, or maybe not quite 100. I forget how long of a period of time it was, but drop in bonds, 59.5. Thank you. Yes. I wouldn't mind paying half also. You know what, Josh? You need to read your comments before you send them, because it's hard to keep up with what you're saying when you send them and then send your corrections afterwards. Just don't hit send until you proofread. Arjan Cena, hey, first comment on YouTube. Good to see you. You read all those, Dimitri? Nice. How many stars do you give out of 5? That's a hard one. I don't know yet. Between 3 and 4. I don't like books that are unnecessarily wordy. So I really like clear, concise, short books that just get to the point. Like, what's the moral of the story? I really, really, really prefer that. So it's hard for me to give a 500-page book a 5-star review, because so much of it was anecdotal. Now he's demonstrating points. It's almost like supposed to be a small textbook, so I get that. And it wasn't really highly anecdotal, but there was a lot more information in there than I needed. So for me, my personal review, I can't give it 5 stars. Is Vanguard Fund still open? What do you mean, today? Like, the market, I think, closes at 4, right, normally? I'm not a day trader, so I don't keep track of the hours, but are you talking about VTI still being open? Like Vanguard in general, the company? Vanguard is, yes, still open, unless something happened that I'm not aware of. It's on YouTube. You can listen to it. What is? I'm on YouTube right now. What is the formula derived from it? He offers a variety of strategies that you kind of have to pick for yourself what you prefer. Hi, Kayla. It's investment in yourself. Yes, that's important. What you saying is totally off the real game. All right, why don't you spit the real game to me, Dimitri? Papa Hobbit, thank you. Greetings from Germany. Is your name Sven? Hi, nice to meet you. I'm Taylor. I go live every single day, 7 days a week, and I have been live for over 3.5 years straight. 30 days. Hi, Jack. How are you? The secret of wealth is compound interest. The Wealthy Barber. Here, let me put that on my list right now, because it's coming from Tony. I'm putting it on. Oh, but I changed my password. Loving the crew. Loving the crew. Ah, ah, loving the crew. Most people wait 2 weeks for a paycheck. If they can hold out 2 weeks for the penny doubling, it's more. Yeah. Do, 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 do. Why can't I copy this? Easy does it. Paste. Sign in. Risk lever with leverage portfolio. Oh my gosh. Whew. Even just thinking about that is like, whew, makes me hot. All right. Wealthy Barber. The Wealthy Barber, The Common Sense Guide by David Chilton. The Common Sense Guide to Successful Financial Planning. All right, want to read. Okay, it's on my list. You can also, if you guys ever want to send me books, my P.O. box is on my website, nextjuice.com, if you go to contact. I do have a lot of books on my shelf to read already, probably like I don't know, maybe like 20 plus books over there. So it's going to be a while before I read anything new that's not on that shelf already. But if you mail me something, I'll try to move it up in the list. I won't put it to the end. You're not going to get a penny a day in the real world. It will go negative fast on the third day and then fly high 5 days later. Yeah, of course. 30 days hardly seems like delaying gratification, especially for free money. Yeah, you would think, right? 1919? Okay, yeah, so it was like 150 years, 154 years or something. Huey, hi! Net present value depends on what discount rate you are using when discounting future cash flow. Yeah, it depends on more than just that, though, because not everybody does that. Like Warren Buffett uses his own kind of made-up metric, which is owner earnings, which is free cash flow times 10, I believe. It's like something he uses for. No, it's free cash flow. Hang on, let me pull up one of my. No. Gotta pull it up here. Pull up. All right, let's just look at Apple. And I've run valuations live as well. You can check that out on my YouTube channel too if you like. So, it's operating cash, right? Owner earnings is net profits plus depreciation and amortization, accounts receivable, accounts payable, income tax, and maintenance capital expenditures. And then you take that times 10 to get your 10 cap price, which is what it will be worth over the next 10 years, roughly, right? If it stayed at that value. Divided by the number of shares, you get your 10 cap price per share, which for Apple, last time I checked it, was $359. Asif, hi! Different businesses have different valuations in free cash flow. Yes, thank you for saying that. That's actually something in this book that he touches on a lot, is like the shady accounting practices and how things aren't fully standardized across companies, and the way that they kind of try to like move numbers around to make it seem like they made more money and that they've had growth, and they kind of try to like sweep their debts under the rug, and they make things seem like they're like one-time purchases, like rare expenditures, but they're actually like regular expenditures they have all the time, but they try to put them in these little spots so that they don't affect their net profit, or not their net profit, some numbers. I forget everything that he, obviously 500 pages, I don't remember every word, but the general idea that like you have to look at the numbers yourself and be comfortable with them and really read the reports and really decide. Or you can invest in a total market index fund where people that are paid to do this will do this instead, right? The defensive. But if you're going to be enterprising and you're going to pick specific companies, you really have to understand what all these numbers mean and what kind of company you're really dealing with and working with here. And if they say one thing, does it really mean something else, Oh, well, thank you. Thank you. Loading error? What is that? Thank you for that. You'll just stick with pyramid schemes, Bradley? Hey, whatever floats your boat rocks my ship. This seems complicated. I'll just stick with the pyramid schemes. Pyramid schemes are probably pretty simple, but so is defensive investing. A new piano. This is actually Ed's old piano. He just moved it from his old house in with us. And we've been playing it. We've been having some fun. You want to do a little piano? This is my song that I'm like totally obsessed with lately. I love that song. It's so fun to play. Hey, Redemption, how's it going? The book you read on YouTube. The book I read on YouTube? Which one are you talking about? I do all my book reviews on YouTube, I think. How do you have this interface on the screen? Never seen it before. I'm using StreamYard. StreamYard. Do I have like a... Nah, I don't. I'll just type it in the chat. StreamYard.com. Did that go to YouTube and Periscope, I hope? Yeah. Hi, John Smith. How are you? Where have I been? You haven't seen me? I don't know why. I've been live every single day. I haven't been anywhere. Been right here in your phone all along. Plus in different historical times. That's different. What? Different historical times. History is history is history. It doesn't change. Did Ed and no, he had movers do it. Yeah. When you have time, look into the CAPM, Capital Asset Pricing Model, and the Efficient Frontier. What is that? Can you direct message me that so I don't forget? I don't know what any of that means. Hello, 838. Chasseur, bonjour. The pedals piano is difficult. I don't think so. I think it's a lot more fun to play that than it is to play keyboard. I don't know, though. I mean, you can get a pedal for your keyboard, I'm pretty sure. The sound just isn't as full, you know? I'm sure I have something with pedals here. Oh, God, I haven't played this in a while, though. Oh, that's actually not right. Oh, yeah. Get this one pulled off here. There's a little pedal piano for you. On top of a smoky. Reminds me of a Subway meatball sandwich and a dog I once had. What does that even mean? I don't even understand what's happening right now. Thank you, Redemption. Okay. So I caught up with the comments. It's about creating an optimal portfolio. CAPM and Efficient Frontier. Just tell me how to DM you. Twitter, Instagram, Twitch, email, anything. So if you go to my profile, go to my website, the link's in the profile. Just go to the contact page and you'll see everything there. And even at my top header, you'll see like the link to my Twitter and my Instagram and all that stuff. Will your investments be different now that you've read the book? I think I'll keep my speculative portion of my portfolio to 10% max instead of 20, maybe. We'll see. I won't. No, pretty much no. But all I've really studied was value investing. I just never really studied like the source of the kind of the original guru that Warren Buffett studied under, But I did already have studied Charlie Munger, Warren Buffett, Phil Town, Grant Sabatier. So no, nothing changed. Not for me. But hopefully you guys enjoyed this book review. Let's sum it up again real quick. Speculation versus investing, defensive investing versus enterprising investing, and value investing, investing with a margin of safety based on value instead of on historical price. Sound good? Love you guys. Hope you enjoyed this. Please do subscribe here to my YouTube channel and follow me here on Periscope. I do go live on Periscope every single day. I do these book reviews on YouTube as well as some other types of content too, so stay tuned for that. Notifications on for everything if you want to catch me live. I am a full-time live streamer, so most of the value I create is done live. But like I said, I also email out my book reviews 3 times a year. Once every 4 months, you'll get a written review, paragraph summary without all the commentary and distraction and piano playing, right to your email for free. And it's once every 4 months. So I don't spam your email inbox at all. And it will also have links to all the books that I've read. So if you lose touch with me or you kind of like forget to come check in on the streams, or you get kind of bogged down with all the other things that I do, then that's a nice kind of succinct way to get that email to you right at nextjuice.com. That's not, you just put like a name and an email. I don't even care if you put your real name, just whatever name, and then an email that you'll actually get emails to. I'll overtake Warren Buffett in no time? Probably not. It's fun to be a little bit speculative. Exactly. You like the piano? Me too. It's so much better than the keyboard, isn't it? Me too. Oh, awesome. Thank you for the super heart. Sorry. I'm on StreamYard, so I missed that. Thank you. Thank you so much. First super hearts of the broadcast and last super hearts of the broadcast, because we're signing off. I'm going to come live again in just 1 minute, 5 minutes maybe, and do a review on this book, The Power of Habit. Actually, it might be a few minutes because I need to write myself some notes so that I can make sure I don't miss anything, and then I'll be live in just a little while, okay? And I was live earlier in my private Periscope group. If you want in on that, click the link in the profile, nextjuice.com/support, and become a monthly supporter of the channel. That gets you access to my private Periscope group where I do additional content, or if I feel a little overwhelmed by some of the cyber harassment I receive in the public streams, I'll go and hang out in there. It's a little bit more low-key, intimate, and relaxed in there. Yeah. And I go live on Twitch too. Did I say that? I go live on Twitch every day doing gaming as well, playing Fortnite. So if you want to check that out, you can do that too. It's NextJuice everywhere. NEX Juice. JUICE. Hi, Ben. Bye, Ben. Hi, Mike. Bye, Mike. Thanks for being here, everyone. I will see you in just a few minutes. This has been A Moment in Time with Taylor. Please remember that you are worthy of being loved and feeling comfortable in your own skin and with your own investment strategies. So even if we don't agree on investment strategies, you're still worthy of feeling comfortable with what you're doing. Got my hands full? Always. I love it. What else am I going to do with these hands? I got to fill them up. It's like, living every day like it's your last, trying to max out your life. Raid! We have no one to raid because we're not on Twitch. We'll raid somebody tonight, though. And I've been resisting playing Fortnite all day. I was like, there's so much work to do. And I'm like, all I want to do is play Fortnite, but I haven't played yet. So I wanted to get I wanted to get my credit cards paid. I wanted to get my spreadsheet up to date, which I did in my private group earlier. And then I'm going to work on these book reviews, and then I'll be ready to play. So one more, and then we're ready. Thank you guys for being here. Enjoy the rest of your day. Live it like it's your last, and I hope to see you on the next juice. Bye, loves.